Hey guys, it's Kaizen here back with another video, and today we're gonna be talking about market structure and how you can see market structure clearly and obviously how you can trade it. So, um, there are three types of market movements, right? Let me go and show it out for you guys. So there's an uptrend like this, and then there's a downtrend just like this. So we can see that there's a low here, right? And then there's a high over here. Again, low here, high over here. So now what are these lows and highs called? So this over here is a low or swing low, right? And this is our higher high, and this is our lower high because it's higher than the one before it. Again, higher high, lower high. So let me just go and drop that real quick. And it's the same thing over here. Breakdowns of these levels, right? Break over here, break over here. So this is our high, and this is our lower high, and this is again another lower high. Let me just repeat that. So high, lower high, lower high, and this is lower low, lower low. Again, this low is lower than this one before it. So these are the two types of market directions, right? I'm gonna talk about the other one later on, but again, whenever this we see this previous high getting broken over here, right? It's called as a break of structure. Let me mark that up for you guys. A break of structure. So I think I've talked about this before in my video about how to trace supply and demand. So every time a break of structure happens, basically target the low and right up to the highs. Same thing over here. Let me just move that real quick. Break of structure down here. Break of structure down here. Can just mark it up. So again, you aim to short at the odd block down to the lower low, because again this one has already been broken and just aiming for the next lower low. Now this is the market, these two are the market structures you want to trade, right? These are the trades you want to take. Now what there, like I said, there are three types of direction the market goes in. Now this one is the market structure where price just consolidates in just one place, and it doesn't really give you a clear structure, just pure manipulation. So as you can see, this is basically choppy price action. There's liquidity on both sides. We do not trade this because again it's just risky, plus again you don't really know where you're going from to trade it. So this is the market structure you don't trade. This is called consolidation, or some people call it just chop. So as you can see, the price is chopping, and However, you can use this on as liquidity to target into your order blocks. Now, how can we do that? Let me show you. So let's say we have a uptrend like this, right? Now we see some chop over here. So now let's say our order block is right here, and this over here is our break of structure. Now, how can we use that consolidation? I told you that it's counted up as liquidity in our favor. So basically, as we can see, there's some chop price action over here. We're gonna mention that up as liquidity, and what happened is we'll just target this liquidity to get taken out right into our order block, and we're gonna put our stops at the low of the order block, our TPs at the swing high, and all we gotta do is write it up. Since all this liquidity has been taken out, we are just gonna write up the move from our order block. Now again, you can do this on a short as well. Let me show you. So yeah, lower, this is our high, this is our lower high, higher low, lower low. Now again, some consolidation over here, test into our order block and back, just like this. Our high, our lower high, our lower low, our higher low, our break of structure over here, which made another lower low, consolidation over here, which we count up as liquidity. We wait for the price to retrace back into our order block from this lower high, and we short it. Our stops at the lower high and our TP at the swing low. So this is basically the market structure and how you can use it to your advantage. Now, as we can see, these are both one directions, right? These both trades are going one direction. Now, they can also switch up. Like a market can, let me run a new page for you. So like a market can go on a upwards direction, right? However, it can break that upwards direction. Now, what do we do when that happens? I'll let you guys know. So again, over here, this is our upwards direction, our bullish momentum, break of structure, break of structure, break of structure. Now, the market breaks our lower high and becomes bearish. The price action becomes bearish. Now, what do we call that? We call that a market structure shift. Let me actually mark that up, tell you guys. Market structure shift. So now that's a market structure shift. So it's basically the same thing as we were writing these. Sorry, let me just. As we were writing these lows to the highs, now what we're gonna do is just gonna write that high to the low. You know, as the price is going over here, as you would write the bullish momentum, right? Now what you're gonna do is when the market structure shift happens, it's gonna wait for the retracement back into your high over here, and you're just gonna short the market. And again, it goes for an order block. You can say over here as well. You can see this again will be break of structure. This two. Now this can also happen when you're going from short to long. Now this was obviously from longs to short. Now how will it happen from short to long? So basically, let's say the market is moving something like this. So again, this right here is our high, lower high, just shorting it down with every order block you see, right? Now what happened is there's a shift in the market which changes the direction of the market. This right here would be our shift as this high has been broken. As you can see previously, these highs were not broken and the market just kept falling a short direction, just a bearish direction. Now, when that break happens again, it's called a market structure shift, and we aim for the lows and we just ride it up to the high again. Aim for the lows, ride it up to the high. Now, once that market structure shift happens, you can start mentioning your breaks as break of structure. Same thing over here, break of structure. Now, again, this is very simple looking uh, way that I'm putting it. Now I'm gonna show you how this looks while there's, you know, liquidity in between. I'll show you in a more advanced way. So let's say this is our high, this is our lower high, this is our lower low, this is our lower high, lower low, lower high, lower low, and then the market structure shift happens. Same thing. The moment the momentum becomes bullish. So as you can see, this is normal, right? This is the normal one I just drew, but a more complicated one, a more advanced one would be something like this. This is obviously our liquidity. Actually, yeah, so this is our liquidity. It's just being targeted. And just go write it down again. Now, this in a market structure shift way. This is the consolidation, and just write that to the highs. So our break of structure right here, break of structure right here, and then this would be a market structure shift, and this would be our liquidity, which will help us target these lows and come into our order block and just ride the price action back up. Now I'm gonna show this again, but in the bullish, uh, in the bearish market structure shift. So the market is going up, right? The market is going up. What do we do? What does the market do? Creates a shift right from the slow, breaks the slow right here, right up to the highs. So now we have some type of consolidation, which we can consider as liquidity, comes into our order block, and again we write it back down. Break a structure, break a structure, break of structure, market structure shift, order block right here at the high. All this, all this is all this consolidation is our liquidity that we're waiting to be taken out. So it taps into our order block. We have our limits right here on the order block, and we just target these lows. So I hope you guys understood that, and until the next one.